Hi, David Moore with Equity Advantage and IRA Advantage here with my guest this week, Art Scevola, and Art's going to talk to us about life insurance contracts and just policies, what the good, the bad, and the ugly. And I guess I'd like to start off by saying that I've known Art for almost 2 decades now. And he looks pretty respectable today, but he is a good old surfer boy from Florida. So, so Art, I know you spent a number of years with Merrill Lynch and somehow ended up out here in Portland. But but that water and guitar playing and surfboards and everything else sort of have a permanent place in your heart, along with Jimmy Buffett. So.
Absolutely, you and I have a lot in common, being you're the Santa Cruz guy.
Definitely.
So. Yeah, bi-coastal. It's been a fun run here. I have actually got my family all ensconced in the Northwest now, and we're at a place where life insurance has been a component of my business life since 1972. So, I'm an old-timer in that respect. And my basic thrust is to try to help advisors, using my background, experience, and current affiliations to help solve particular problems that come up when you're successful. High net worth, people who have business ownership, charitable planning, where and if life insurance is either already a component or may need to become one, and to be able to navigate the channels of not only tax law, but economics and understanding the type of life insurance that really fits a particular solution. Those types of things are really where people get bogged down and they throw their hands up in the air. So what I hope to be able to bring to the table are ideas, communication skill with respect to navigating the particular companies and organizations that are out there that really specialize, as I have been, in working with the high net worth. And I've been doing that since 1986 when I first came aboard with Merrill Lynch. So there you go.
So you should be prepared to do that.
I should be.
So I think about a decade ago, I read a headline. Somebody had, self-directed IRAs putting sexy back in IRA. So as you know, if you're a regular follower here, we don't sell investments or give investment advice. Art's here today really as sort of an accommodation to people's questions and also just as a resource. To bring some things up that people probably don't think of. And tax reform made a couple changes, which we'll get to in a little while. Right. But, the main thing is people don't really think about life insurance a lot of times till after they need it. And nobody ever really likes to talk about insurance,
right.
period.
Right.
But there's lots of opportunities out there that people may or may not be aware of. When we're looking at, let's say for our 1031 clients, this is not something you'd be working into investing in, but you might need it for estate planning purposes. So we're going to look at it from 2 different directions: investing in and also investing in for your life,
right.
and estate planning and maybe working things in or out of businesses too.
Right.
But the main thing is, hopefully at the end of this, we'll be able to give our followers
right.
some great ideas and little nuggets of knowledge and
okay, you bet.
So yeah.
All right. Well, just to kick it off, the main thing to remember is life insurance is just another financial tool in the toolbox. It's not a panacea. It's not something that may fit every situation, but where and if it does fit, it's one of the unique, still under the tax laws as well as under basic investing, that's one of the unique products because it represents something called discounted dollars. And if I need dollars to be delivered to a particular place to help offset a problem, and the problem could be everything from replacement of income if I'm a 30-year-old to paying $5 million in estate taxes when I'm, somebody that's got a big successful business interest. Life insurance provides an alternative solution that needs to be examined. By the same token, we've reached a point where today life insurance in some cases is an asset that's what we will call a hidden asset, meaning that even in the case that all it was ever going to be being used for was protection against such things as I mentioned, it now becomes less important because I don't need the protection, i.e. in the estate tax reform we've just had. Do I have to use life insurance to pay estate taxes at a substantial discount? Who knows? At this point, we have a 6-year window. There's a lot that can be done for people who would otherwise be in a estate tax zone, so to speak, that either through the operation of the numbers or through other planning, that no longer will need that life insurance that's sitting in an irrevocable trust or in some form of a family partnership. And I'm not saying that it's bad, but it's an asset. Now, here's the story.
So Art, let me interrupt you real quick.
Please.
So let's go back to the just you said a 6-year window here. So for the people that aren't necessarily aware of what happened, and can you explain a little bit more on that?
With the most recent tax reform that we had go into place in January, we know that every taxpayer citizen has a unique amount of dollars that are protected against the estate tax that are transferable at death. Now, we know between spouses there's no estate tax. But what's interesting is individually we're now over $12 million, which doubled, and so that makes $24 million plus for a couple to be able to transfer to a next or even a further generation without the imposition of federal estate tax. Now, that is not to say that the states have conformed in any way, because there's still state income tax. Oregon will collect over a certain amount of asset value, and you always have to plan some of that.
So really what you're saying is you've got to be aware federally we've got one set of guidelines, but we've got a number of states that don't follow that.
Absolutely.
And you've got to, so it comes back down to, and when we were talking earlier, talking about what to talk or not to talk about in tax or legal issues.
Right.
And I want to stress that, just as I said, we don't sell investments or give investment advice. Art's not going to give tax or legal people. So we're just members of a successful team of investment professionals. Right. And you're going to get your tax and legal people involved. It's a complicated world, and there's lots of different things out there. But you need to take advantage of the resources you've got, pay people that have the knowledge, that are not learning on your dollar necessarily. So the thing is that we're going to sort of broad stroke some of this stuff. It's not, it is truly case by case, state by state, what's happening with it. But the tax reform, that window, we've got that tax reform is not a permanent deal, so we've got a 6-year window basically that says, well, if you sell a policy today, and that's one component of what we're talking about today is actually investing in those policies, but also how to use the policies you've got, highest, best use, what you need, don't need to transfer generationally, wealth, or even businesses, key man or anything else that might be going on.
It's a team approach, though, that I respect the most in the process of working with people that have been successful. When I say a team approach, no one person on the team typically can provide all of the ingredients for a successful plan. Some of those ingredients come in the form of advice, which is paid for, as you always have in advice, hourly or by a project. Some of them come from products, and certain products carry different prices. And I think it's critical that if there are products that need to be a part of a solution, that you have capable and wonderfully well-positioned people, to say a word, that have some independence that can give you advice. So that's the way I would look at that.
So to wrap up this segment real quickly, I just sort of look at it as preservation of capital. You're putting things in place to keep your money yours.
Right.
And when we talk about a 1031 exchange, obviously that's our goal, is to keep our clients' money theirs and working for them. If we're talking about IRAs and 401k plans, the same thing. The bottom line is highest, best use for your money, keeping it yours. Historically, you're probably going to look at things and feel you've got your best interest in mind, and so on and so forth. So once again, David Moore with Equity Advantage and IRA Advantage here with Art Scevola. We're talking about life insurance policies today, and thank you. We'll be back in a moment.